The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 16th wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is a tool I call Worry Only Wastes Time. Something that we can never get back, nor do we have enough of. You know, folks, each of us from time to time, we experience the emotion of worry, some more than others, and for some, it can actually be all-consuming. Now, if you're involved with the markets, how often do you experience worry? How about an active trader? What do you think their worry meter looks like? Well, let's step back for a moment, and let's look at worry from a different angle. As you know, I'm a strong believer that each of us needs to be an electrician that rewires ourselves, because most of our belief systems, well, they're all wired up during the first 8 years of life. You know, as babies, we're often rocked to sleep, and rocking, or specifically what I'll call a rocking chair, is a lot like worry, and that it gives us something to do, but it doesn't get us anywhere. Yes, a rocking chair is a lot like worry. It gives us something to do, but it doesn't get us anywhere. Yes, the rocking back and forth, well, it's comfortable, and it may even temper the sensation of pain, but rocking leaves us in the same place and does not move us forward. Look, the easiest way to learn something is always to link the known to the unknown, and that's the reason that I am correlating rocking to worry. And rocking doesn't move us forward, nor does worry. In fact, worrying occupies the place of rest and relaxation, which what that does is that takes away our revitalization. And then when it comes to making a decision, that puts us at a disadvantage. So in one sense, worrying can be referred to as the most destructive way to meet the challenge that is in front of us. Webster's dictionary defines worry as to strangle or to choke. Look, the quickest way to free ourselves from worry is to accept our self-responsibility, which means we need to focus on the moment, take responsibility for our thoughts, for our feelings, and refuse to allow worry to interfere with our success. Here, let me give you another example. I don't know about you, I've owned several businesses in my life, and most business owners might be able to relate to this. In fact, you're all a business owner. If you run a household, you're a business owner. So maybe at one point in time in your life, maybe now, you've experienced the struggle to actually pay your bills. Is that something you might worry about? Look, worrying about it doesn't solve anything. And absolutely, whereas I'll offer something that does solve it. Sit down. Put all your bills on the table in front of you, take out a piece of paper, and then begin to solve the problem. Because you can look at, there's really two ways. It's a math equation. You either increase revenue or you decrease expenses. It's really that simple. Worrying about it is not going to accomplish anything. In trading and investing, it's what I call money management, which means, for me, it means don't use stops that are so tight, because you can be right on the trade and wrong on the money management. Always understand, this is really key, always understand the average true range, the average daily true range of something that you're investing in, because that is just simply the normal movement out there. You see, what trading and investing is all about, the real key, and it's not talked about, it's not really, there's not very few books that really discuss it, it's not really the focus, but it should be the focus, it's money management. And money management is really about position sizing. Your stop needs to be your stop. It needs to be at least as wide as the average true range, because that's just daily volatility from up to down. If you're within inside that, you're really communicating to the market that you know where price is going to stop. And if you are that good, if you really are that good, you need to be doing this radio show, not me. what I know is that price is going to travel within a certain range out there. And so it's all about position size. That means take 1% of your working capital. If you have $100,000, 1% is $1,000. Divide that $1,000 by your stop and make sure it is at least the average true range. I say make it a Fibonacci expansion of that, and that will determine your position size. How many shares of something that you can buy, folks. If you do that, you'll be able to sing that song that says, "Don't worry, be happy." Let's go check out the markets. Let's go see if we can find some happiness out here right now. Dow futures up 75 points. They're trading out at 16,279. S&P futures up 8.5. They're trading at 1847.75. NASDAQ futures up 15 right now. Everything up about 0.4%. Russell 2000 as well. Let's see, U.S. dollar index back 10 pennies, trading out at 79.78. Goldilocks up about $3 right now, trading out at 13.04. Silver up 14 pennies, traded at 19.63. A little bit of movement here in that light sweet black crude out there, up 0.9%, up 94 cents as we speak right now. A quick peek across the globe. Let's see what we have out here over in Europe this morning. A little bit of celebration. The DAX is up 1%, trading up 99 points. The FTSE up 0.5%, trading up 30 points. In Asia last night, it was green arrows across the board, but the green arrows kind of muted. The Hang Seng was only up 0.1%, 24 points. The Shanghai up nearly 0.2%. That's only 4 points out there. The Nikkei, on the other hand, up 3%, up 420. Our call-in number is 877-927-6648. Happy to take your call, answer your question, assist you however I possibly can. Let's start off by taking a look at weakness out here. That's the NASDAQ. As we take a look at the NASDAQ futures, it's the daily chart that I've got on my screen. If you're listening on your radio or your mobile device at tfnn.mobi, thanks so much for doing that. Remember, you can catch the live stream of the show by going to the homepage of tfnn.com, upper right-hand corner. Look at that little smartphone-ish type button out there. Click on that. The show will stream live to you. And, of course, the archive is on Channel 9. What the NASDAQ did yesterday on the daily chart, it made a 100% move of a move. What does that mean? Well, what it means, it came all the way back to the swing point. Let me get my cursor out here. That would be helpful. My crosshair, I should say. Came all the way. Well, come on, Steve. I'll grab it. It came all the way back to that February 5th swing point, that swing point low. So when we refer to something as a 100% move of a move, look, when you are trading and investing, when you're making a trading decision, when you're trying to do your reward to risk analysis, one of the first targets that you need to look at is where's the prior swing point out here. Look for the significant swing point for sure. There's always going to be, just like when you're driving down a street, you've got major intersections and then you've got crossroads out there. Look for those major intersections, because from those major intersections, this case here, from high to low or low to high, whichever way it is that you're trading, you want to take a look at one of your ultimate targets is that 100% move of a move out here, and that's exactly what took place yesterday. Not only did that take place yesterday as price got down there, and there was some volume pushing to the downside. It says at some point in time, that means that swing point ought to be tested out there. But what occurred yesterday is the bulls truly stepped in. They formed our one-day reversal candle out there, and that's referred to as a hammer. It's not a pretty hammer. It's got a little bit more of a wick and a shadow on it. That means the upper extreme emotion, because that's all that these wicks represent. You see, it's the body of the candle that truly is the essence of price out here. Nonetheless, you got a hammer candle that was hammering out the lows as price was making a 100% move of a move. We're going to see what kind of action Jackson there might be inside this NASDAQ futures contract on the daily basis. Key numbers to be paying attention to today, 35.32. If we see a close above that, that would help the bullish case out there. It still has some substantial resistance, whether it's trend line resistance, channel line resistance here. I'm not showing that on the chart as we speak right now, but the first area to be paying attention to is the NASDAQ needs to get some more juice. Now, that also means that the low from yesterday is really critical, because not only was it a 100% move of a move, but it was a hammer candle. And you know the expression on a hammer candle, you close below a hammer. If you're long, you are wrong out there. That means that low of 3404.75 is very important as we take a look at the NASDAQ. So NASDAQ has had nothing on a daily basis out here. You can see you can see these three green Three little green boxes out here. Those are Rhodes momentum indicators. They clearly tell us that the sellers have been in control of the market out here. We're going to see what the buyers, what the bulls can do, what they can muster up over the course of the next day or two out here. Let's check on the daily chart here for the ES Mini as well. Let's go see what took place yesterday. No hammer candle that took place, but the ES Mini now up above a resistance level, which was 1845. A lot of time left in the trading session. What the ES Mini ought to attempt to do is get up into that swing point from April 4th. The low out there is 1855.75. Right now you're trading out to what, 1848.25. So pretty decent move. The question is going to be what happens when it hits the top, or when I should say hits the bottom of that swing point out there. That's the likely target for the ES Mini. Well, guess what? That happens to be your swing point. That happens to be your 100% move area, which would mean getting back and testing the highs out here. We'll take things one day at a time, one step at a time. If we go take a look at the Dow futures, let's go see what they've got cooking for us this morning here. Dow futures trading up 79 points, trading out at 16,285. They're starting to look a little promising here. The Dow, as we know, has got high volume at that April 4th level. That was that Jobs Friday. Very close to testing the low so far. Right now, that low, which is going to be tested, should be tested today, is 16,312. Right now, you're trading at 16,285. Dow futures up 81, S&P up 9. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's see, moving in the pre-markets out here right now, we've got SodaStream, SODA. It is closed out at $37.69, trading out at $41.30. That's the last trade that was fired off. Yahoo out with numbers after the bell last night. They closed at $34.21. They're trading out at $36.96. What else? We got Gilead Sciences. They closed at $68.17. They're trading out at $69.10 right now. Facebook closed at $59.09. It's trading out at $59.77. To the downside here, leading the charge, Azimil Holdings, ASML. Now, they closed at $85. They're trading down $5 right now. They, too, were out with numbers here. I don't know if it was after the bell, before the bell out here. It's all in euros out here. So their net sales for the first quarter, 1.39 million euros versus 0.89 billion. 1.39 billion euros versus 0.89. So that's pretty nice growth out there, but they are getting hammered to the downside. We got CSX Corp. They closed at $28.29. They're trading at $27.25 right now. What else we have here? Bank of America, they were out with numbers before the bell. They closed at $16.39. They're trading down at $16.13 right now. Now, big move last night was inside of the Nikkei. Now, the Nikkei here has all kinds of gaps, the upside and the downside. And, theoretically, it formed a island reversal bottom last evening with a gap up, leaving the prior three sessions, meaning the April 11th, April 14th, and April 15th, was a nice little bottom. What the Nikkei needs to do to prove that it is through with its descending price channel, much like our markets as well. So, our markets, all the markets around the world have their work cut out for them. If you just simply come to the high from December 30th out here, and you use the close of that session, which was 16,291. Use that as your channel line. Then what you can do is you can use both the close of April 3rd as well as the close of April 4th out at 15,063 as really the descending price channel line that price needs to break above in order for the market to signal, in this case here, the Nikkei to signal that it wants to move higher out there. Otherwise, that should be resistance, the top of its price channel. What's that price area? Depends on what day of the week it actually would hit that area. It's probably around the 14,675-ish to 740, somewhere perhaps in that range. We'll keep this chart on our screen. We'll keep this price channel on our screen. And right now I'm more interested in the top of the descending price channel than I am identifying the exact bottom of it. Let's take a look. We're over here in the overseas markets. Let's take a look and see what we've got going on here. If we take a look at the DAX, I've mentioned the DAX is up nicely this morning, but not really anything of significance inside of the DAX. Now, when I say significance, yes, it's trading up right now a little over, 1%? Where is it? The DAX, where's the DAX? 1.3%, up 119 points. But really what it's doing, it's having an inside day, right? So no big piece of information provided to us inside of the DAX out here. Let's go take a look at the FTSE. The FTSE here still trading in its 400 point, as I recall, 400-point consolidation range. It has not hit the bottom of that. The bottom of it might set up a nice buy. Of course, if it breaks through the bottom being somewhere around 64.24 or so. Of course, it breaks that area. That says 6,000 would be the price level that we want to trade to. So it's a big consolidation. It's been going on since the trading session of October 11th, 2013. So it's a consolidation worth paying attention to, either to play the consolidation from the lows to the highs or the break of the consolidation. That is a nice, large pattern out there in the market. Take a look at the Shanghai, kind of an interesting stock chart out here. This is the monthly chart that we have on our screen. The monthly chart shows the descending price channel that's been in place here since 2009. That's right, since 2009. Now, this month here, just slightly as we speak right now, trying to break above that descending price channel, trying to find some legs. It did close above that level back in November 2013, but then immediately the following month gave that back. That was a false breakout. It is making another attempt here in the month of April, so that is worth paying attention to and noting because that's been around. That is a monthly chart for a long time out here. If we take a look at the monthly chart for the Hang Seng as well, Hang Seng here has been in that little rising price channel, and price here has been bumping up against the bottom of that rising price channel. It rejected that area on the last month, the month of March. We're still up above there. No breakdown here yet. Change in trend will be a close below the bottom of that rising price channel. Right now, we got the Dow futures up 84, S&P up 9. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 110 points, trading out at 16,372. S&P up about 12, trading at 1855. Composite up 33 points, trading at 4,067. Russell 2,000 up 9 points, trading out 1128. The week indices right now, they are leading the charts. The upside both up respectively 0.8% out here. Apple down 57 cents. Microsoft up over 1% here this morning, up 44 cents. We know we've got a large A to B equals CD to the upside that it is confirmed and completing. Intel up 27 cents, up 1% this morning. Netflix up $5. Google up $6 or $7. VIP shops, VIPS up 4. Visa up 4, Amazon up 330, SodaStream up 360, Baidu up 380, Actavis, ACT is a ticker symbol, up 350, TripAdvisor up 250, Yelp up 275, Asmil Holdings, the leader in the clubhouse, to the downside, $4 and a change, 460, trading out at 80.48. Clack, KLA 10 Core down $2, down 3% this morning. Lam Research Corp, LRCX, off about 3%, off $1.50. Twitter off 84 cents. Norfolk Southern down $1 out here. Now, the Euro Yen, if you're watching this on Tiger TV, I've got the Stevie correlation chart. That's the correlation chart between the Euro, Japanese Yen. That's on the bottom of my screen. The top portion being the ES Mini right now. That's what we've got up there. And that had shown us a divergent pattern, right? That's how important this currency pair is. I can't understate how important understanding this currency pair because of its relationship to the U.S. stock market. You can ask me why. I don't know the answer to that, other than it's the carry trade. That's my only answer. What I do know is that it works, that we need to track it, and it works nearly all the time. Nearly all the time. And when you see these correlations, now it's not to be used as a timing tool necessarily. Not always. It can be at times. I'm going to go ahead and see if I can get this established here. We're going to go to Game Plan B, which is we're going to take a look at my newsletter. That'll be the easiest way for me to look at things while I'm getting things backed up here or getting things back up to speed. So give me a moment to pull that up on the screen here. Hopefully that's what we'll take a look at. So we're going to fall back and take a look at this. So maybe, Al, give me the high sign. Somebody give me the high sign that you can at least see my screen out here. So this is my daily newsletter service, and that's going to be the easiest. It's pretty thorough. Just to give you an idea, somebody, Al, give me the high sign that you can see my screen out there. That would be good. Okay, great. So what I say is pretty thorough. I've got an expanded version of this which covers total, for example, today covers about 56 pages worth of information. The daily newsletter is about 15 pages. The way that things are laid out is I go through. So right now you can see I give the message of what I consider to be the S&P 500 as far as where we're at. And I consider us right now to still be in a counter-trend rally. Having a nice bounce today was to be expected. It was truly to be expected with regard to what we were taking a a look at inside of the euro Japanese yen. That's really the currency pair that you're looking at on the top of my screen out here. And the euro Japanese yen, is what I was talking about before I lost power out there, has been signaling to us that we were going to see some type of market bounce, some type of counter trend rally out there, because this has such a correlation to the stock market. So that was giving us the nice signal. We saw that take place yesterday with the hammer candle that was out there. So this newsletter goes out to subscribers, to clients, usually by about 7:30 or so in the morning. So you've got 2 hours before the market opens. I give you a good read as to what is going on inside of the market. Now, today, from the New York Stock Exchange standpoint, if there were to be more than 1,127 net advancing issues, I can't tell you what that number is now, but when we get to the next break in about 7 minutes or so, I should be able to get everything fired back up. And so what we would be, what we're looking at is the bulls will really have taken charge of the market if, in fact, we would see more than 1,127 net advancing issues. Now, what's really interesting here, this happens to be the Euro-Japanese yen, which it also broke through its descending price channel last night, and that therefore is bullish, and that means that it's going to go ahead and it's going to make a larger retracement, probably to the 0.618, maybe even the 0.786 level. And that says that we ought to see today's rally continue or extend itself, and continue and extend itself most likely into tomorrow. That was really the message of yesterday's hammer. And that's what this chart here is showing, the 120-minute chart for the Japanese yen. I showed the hammer candle here that when we began the show, I was showing you a hammer candle that took place inside of the NQ yesterday, the NASDAQ futures contract. Well, guess what? The New York Stock Exchange, a wider swath of the marketplace, it too showed a hammer candle yesterday. So we know that as I say, the cavalry is out. The bulls are truly trying to defend their territory. And that means that the low yesterday inside the New York Stock Exchange is going to be very key. It's going to be very critical out there. And then I've got part of my system is back up here. I want to do one more thing. I'm going to trying to multitask the best I can. This happens to be the descending price channel inside of the NQ, inside of the NASDAQ, and that's really where we need to be watching, because what we might find is that as the NASDAQ, as this 120-minute chart gets up there, it may run into substantial resistance. In fact, that's where I expect that the bears, in essence, are hanging out. We're going to find out whether the bears are going to be able to overtake the bears are going to be able to overtake the bulls today. Okay, good. I think I'm back online. Al, got me connected here?
Let me see. Got me. Okay, great. Okay, now we're back to normal. Now we're almost getting back to normal, almost back to full power, Spock, out here. Next thing you know, I'm going to be able to pop up a chart and get rid of and stop taking a look at the newsletter. So for subscribers out there, I apologize. I normally don't go through everything that a subscriber would see, but boy, it is a good backup. It is a good game plan B out here. And sometimes you need to, when you least expect it. So now, I will go back to those charts out here. Let's go back and take a look at the NASDAQ futures. Give me a moment. Let's pull that up on the screen. We'll take a look at that 120-minute chart out here. And the 120-minute chart for the NASDAQ at this stage here, it came close to making the 0.618 retracement. We're seeing a little bit of a selling pressure right now. We'll see how long this little selling pressure here lasts. It'd be easier if I had my access to everything. In any event, what I would expect is here with the signal, with the message from the Euro-Japanese yen is signaling to us is that ought to have enough strength. We'll have to go take a look at that as well. How to have enough strength to go ahead and take the NASDAQ and push it up towards the top of its descending price channel. And that area, to give you an approximate price, maybe it's in about the 35.50-ish type range or so. Now, what's interesting, as we take a look at if we take a look at the other two, if we take a look at the other 220-minute charts out here, we're going to see the ES Mini. Let's pull that up on our screen here. So the ES Mini, what it did here at about the time frame of 6 o'clock this morning, is it punched its head right through the descending price channel. So now what we're seeing here, when you break above a price channel, when you break above a trend line out there, price will come back and test it. And that's really what we're seeing here right now. We had a move sideways for that next 2 hours, meaning through the 8 o'clock time frame. Now we're seeing price come back and test that. If this is a real break of this descending price channel on the 120-minute chart, we're going to go ahead and we'll see price reject this area. That doesn't mean it can't punch down through here. Remember, this is a
This is a 2-hour chart that we're looking at. So this is a 120-minute chart. This chart here doesn't end for another 14 minutes. But this would be a place where we'd want to go ahead and get a signal. Now, from an A to B equals CD standpoint, the A point on here on the 120-minute chart, that's going to be our low that came in at 8 o'clock in the evening on April the 13th. That low, 1803.25, that's our A point. Our B was the high that came in yesterday at 10 o'clock in the morning as we came on the air. That high, or not came on the air, but a half an hour afterwards, that was at the 1837.25 mark, the low that was put in yesterday. That's our C point of an A to B equals CD, that low, 1809.25. We can see here, price real explosive off of this C leg. So my expectation is what we will see here, we'll see this descending price channel here hold inside of the ES Mini. And then we'll see price make its way up to where? Make that 100% move of a move. Just as we began talking about on the show out here, that 100% move of a move taking us all the way back in here to the area of about 1867. 1867.50 happens to be the 4 a.m. swing point high. 1864.31 becomes your 1 to 1.272 A to B equals CD to the upside. Key level here of support all day long, in my opinion, is going to be 1839.50. If, in fact, we see the ES Mini get back below that, well, the Bulls will have lost all that vigor that they were showing yesterday. But at this stage here, everything points to the markets wanting to move higher between today, and tomorrow. On the ES Mini, we want to watch what happens as price gets up into about that 1867.50 area. If we take a look at the 120-minute chart here for the Euro Japanese yen, let's pull that back. What did it do? It, too, has broken through its rise or its descending price channel out there. Therefore, that is bullish as we speak right now. It is just simply working off an overbought condition. So at about 5 a.m. this morning, it moved into overbought status. If we take a look at that 14-period relative strength indicator out here, nice, strong candle session, and you would have a momentum candle anytime over the course of the next 5 hours or so, where any close above the level of 141.72 would actually be a momentum move, which would be considered a rising 3 candle formation. That's assuming that it doesn't get below 141.15 out here. But it broke through its descending price channel out there, and it's really going to be watching what happens. And then let's take a look at the Dow futures as well out here. And we can go take a look at some stocks that are popping and dropping. When we get back from this break, I'll get my screens and everything all reset up out here. We take a look at the Dow itself punched through its descending price channel out here. As you can see, this is the strong legs. The Dow here going to make its 100% move by getting back to the 16,384 level. The question is, does it want to go visit those highs from April 4th? 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow up 86, S&P up 7, NASDAQ up 15. Sorry for that little hiccup there earlier. In any event, we are fully recovered here. So let's go take a look at these markets. Let's look at what it is we should be looking at for the day. So, number one. The chart I've got up on my screen, that's the VIX index. Now, you know Stevie here, he likes to use it as a liquidity gauge from the standpoint when price is traveling below the 50-day exponential moving average, which right now is trading out at, or is priced out at 1484. That, in essence, was the open this morning. The open of the VIX was 1489. It's trading up just slightly above that. If, in fact, today it dips below 1484, that will give possession of the liquidity to the bulls out here. You see, when price is above the 50-day exponential moving average, it's a sign that there's a lack of liquidity in the marketplace. It's not where the VIX is priced at. It's where it's priced at in comparison to the 50-day exponential moving average. And no better case in point than just simply coming back into November of 2011 when you had the VIX at price point. It closed at about 32 points. And at 32 points, remember, our markets from November 16th of that year, I think it was November 16th of that year, just totally took off topside. Of course, at that stage back in November, you had the VIX dip below the 50-day exponential moving average. So don't get too caught up into the number. Get caught up into, is price above or below the 50-day exponential moving average. So the number to be watching today, that would tell you that the bulls are taking control of the market, 1484. That doesn't mean 1483. And it means you want to see some conviction. What's the next place that we're paying attention to for the overall, for the larger breadth of the market out here? Well, it's going to be the New York Stock Exchange, the NYSE. What did it do yesterday? Well, yesterday it formed a hammer candle out here. That means the lows. Now, what's interesting here tells you that this little consolidation, or at least this little
band out here, this little set of swing points, which was originally set off by Mr. Putin on March the 3rd as the markets had opened lower. That 10,276.13 level, that is important. You can see that area has been tested several times and then finally tested yesterday before the cavalry showed up, formed a one-day reversal, a hammer candle out there. It says any close below 10,271.92. If you're long, you are wrong. What does that mean? That means that price will come all the way back down to the swing point lows here from February 5th inside the New York Stock Exchange. Now, we know the NASDAQ has already done that. But right now, the message inside the NYSE is not so fast. And not so fast means counter-trend rally and may mean, in the case of the NYSE, if it can close inside 10,505.64, that's the swing point high from April 4th. If you can close inside there, says it wants higher price. Says it may go, in fact, and test the highs out there at 10,669. Now, the number of net advancing issues that we have right now today, net advancing issue 1618. That fully gives control of the ball to the bulls out here. All they need today is 1,127 or more out there. Right now, advancers leading decliners by about 4-1, just under 4-1 as we speak right now. So the breadth, the market breadth of the market, how about that? The breadth of the overall market, very strong as we speak here at 957. So those are two areas that we're going to be watching. Of course, the third area is going to be the Euro-Japanese yen. Just make sure that it doesn't begin to fade away or slip away. The bounce that it had called for, the divergence that was there, that now is effectually taken place. And now we have to watch for any other types of divergence that might occur out there. At least that is my read on what is going on. We've got the intraday charts, the 120-minute charts, where prices have punched through descending price channels out here. The Dow says it wants higher price. The ES Mini just simply testing, and if this moves higher from here, we will have tested the breakout, and it will be a real breakout. 8-7. Oh, we're off the air here. I'm a little bit messed up. Hey, folks, thanks so much for joining me on a wonderful Wednesday. Hope you had a wonderful day or morning. Hope you do have a wonderful day. We'll see you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.